Welcome to the Data in the AI Era podcast. I'm Peter Finter, and in this series, I sit down with data leaders from the financial services industry to explore how they unlock the full potential of their data amidst the challenges and opportunities of the AI era. And today, we're diving into the mechanics of real-time market making. It's a story about what happens when you put the right data, models, and people in place to outpace the market, and why delivering the best possible price is a continuous optimization problem, one that directly affects profitability, risk exposure, and client outcomes. Today, I have not one, but two guests, Chris Dale and Nikos Tsoskounoglou from ADSS, a leading broker for global financial markets based in Abu Dhabi. Chris and Nikos, thank you so much for joining us. You both sit at the heart of real-time trading operations where every millisecond matters and every model is a lever on risk. What drew you to the edge of that industry, and what does it take to stay sharp there? I'm fascinated to know what it's like between the two of you. So maybe you could start by just explaining the dynamics of your respective roles and how it comes together around this business.
Yeah, so thank you very much for having us on today. Nikos and I, we co-head the quantitative trading function here at ADSS. Now that means that we are responsible for the price that we make. You mentioned in your introduction there that we are market makers to our client. That means that we create a proprietary bid and ask that we stream to our client base. And if one of our clients decides to trade on that price, that means that we have a position on the other side that we have to decide how to manage. Do we want to stay in that position? Do we want to exit that position? If we want to exit that position, what's the best way to do it? When do we want to do it? And so on and so forth. So all of the traditional market making questions, they're the same problems that we face in our role. In terms of the dynamic between the two of us, I mentioned that we're co-heads. I appreciate that doesn't always work. That's not a dynamic that works for everybody, but we are very fortunate that it does work for us. It's something that came about organically because Nikos and I founded this team. As I'm sure we'll get into in the rest of the podcast, we actually had kind of greenfield to build the stack that we've got today, and it meant that Nikos and I were the first two in a team of two originally, and the team evolved from there. And because we were the original, we have ended up co-heading it, and we've been very supportive of one another through that journey. And yeah, like I said, the co-head thing just works for us, and we're very fortunate in that respect. Nico,
I think it complements. We complement each other. We have strengths, each of us, and different things, and it works well. To your question about what drew me to that industry, I think I studied maths or something like maths at uni, and then curiosity. How can you use that maths in the business and environment and setting? Got me into EFX. And what kept me going is kind of creativity. Like you can be creative with your models and your analysis, and curiosity as well. Curious to find solutions to problems that you have, and try to answer them with maths.
So answering problems with math is at the heart of everything that we do these days, and it's certainly something that keeps us on the edge. One of my questions was, what does it take to stay sharp? And I think to provide some context for that, we should talk perhaps about what precision really means, because it's clear that you have built something quite remarkable and powerful together, and the partnership that you have between the two of you, I think, is quite special. We're going to learn a little bit more about that, but I'd like to go a little bit deeper into this idea of precision. You're running systems where every microsecond counts, and every pricing decision has ripple effects, doesn't it, across risk, revenue, reputation. So let's maybe unpack together the heartbeat of this operation, how you define and deliver precision, and why getting that right is the difference between leading and lagging in the space. So maybe, Nikos, you could start us off here. What does precision mean to you?
Okay.
And what is it about that makes it so critical?
That's a very interesting question to ask and to start us off. So, I mean, I think let's start with the heart of it. What are we doing here, right? So, we're ultimately providing a service that our clients are willing to buy, right? So, what is precision is precision is about providing a product, a price that then your clients will take it, they will trade, and they will ultimately compensate you for that, right? So for us, loosely precision is about finding ways to compete and provide a service to those clients, right? Provide a price that's competitive and our clients are willing to trade. And then ultimately also what it means that allowing to find new ways of generating revenue for us, right? So, our clients obviously want the tightest, the cheapest price, so to speak, right? Obviously, and we know we need to compete in that, but there's a limit as to how much you can compete with just price, right? So for us is precision on price and then finding new ways of revenue, right? So a new hedging algo, for example, can generate a new source of revenue for us that then it means that we can sell something cheaper, for example.
Fair. And I mean, it seems to me that there are some metrics that you will spend more time and attention focused on, and maybe there are others that you would consciously put to the side. Do you think about the mix of metrics and whether that changes over time, or are you consistently focusing on specific things? How does time affect that?
Yeah, that's a
for
good
you?
question. You go.
Nikos, yeah, why don't you start us off? And I'd love to hear Chris as well.
I was going to say that revenue is key, obviously, right? So the key metric is, are you profitable?
Oh, yes.
That doesn't change. I think, there's a number of KPIs that we track. I think, to your question, what's important is that, we tend to analyze our performance over a period of time rather than on a per day, right? Chris, do you want to add anything?
Yeah, maybe I'll jump in now then. And I think, to answer your question, Peter, I think it's a mixture of both. There are some metrics that you cannot ignore, revenue being the obvious one, but there are some things that we look at all the time. Spread retention, for example. So, we are aware of the spread that we are charging as we make the market. We are obviously aware of our revenue and how one metric compares to the other. That's something that we track very, very closely. It's a key performance indicator for us. Things like that you cannot get away from. That's a key part of the job. It's a key part of the industry. But there are other questions, I suppose, that we are constantly trying to answer for which there is no silver bullet. When we do backtesting, for example, and backtest different hedging strategies, and I'm sure that's something that we'll talk about shortly, there is no one metric that tells you what was the most successful backtest or what is the best backtest. So trying to understand, which one of these 1,000 strategies that we've tested is the best, that's where I think we start to experiment with different metrics. We try to get a different view on the various outcomes that we simulated, and try and use, I guess, an array of statistics to help us decide, that very difficult question of which one is the best. So yeah, it's a mixture is the answer.
There's judgment as much as there is mathematics involved, evidently.
Absolutely.
And that leads me to think a little bit about kind of the infrastructure or tooling environment in which you're operating and how much that provides constraints on precision. Is there a strong linkage between infrastructure and precision from your point of view? Chris, do you want to lead off on that one?
Yeah, I think that absolutely there is. So when Nikos and I started this exercise a number of years ago, we had some data and a Python environment, and that was it. And, there is only so far you can go with that tool set. At the very early on in this process, we engaged with KX with a view to building a tech stack that would, I guess, give us much, much more quantitative power in terms of what we were able to research, the data that we were able to capture, and the types of, I guess, problems that we were able to investigate. Now, that was a game changer for us. I guess we're going to talk about that at length during this podcast. But for sure, the infrastructure that you work with is going to dictate what's possible and what's not. We are much more sophisticated today than we were a number of years ago when this team started. And yeah, I guess it's a journey. We hope to continue, that on that path and become more sophisticated. I hope this time next year, we're more sophisticated than we are today. Nikos.
Indeed. That's true for all of us. Yes, go ahead, Nikos. What's your thoughts?
I think to what Chris, it's a journey, right? So, Rome was not built in a day, and so does trading systems. They're not built in a day, right? So, at the moment, we have a very like a customized environment, right? That we've developed and put in place through the years, right? So we have processes that are latency sensitive, that are very, very architecturally, the infrastructure bit is very much customized to that frame, to that need of being fast, basically, versus others that are less important, right? So, and some others are they're customized for fast data retrieval because we need to be able to retrieve 1 year's worth of data and compare something, right? So the different parts of the process are differently customized.
If I go back to what I said earlier about how at the beginning we were working with a very limited Python environment, and that was it. All of the research that we did was after the fact. We would capture data, and then sometime, we would try to order that data, and sometime after the fact, we would try to research a particular problem. With the setup that we now have today, we have a number of things that run in real time, provide insights to, both the quant team and our team of human traders in real time. And, it's completely shifted the goalpost for us in that respect. So yeah, absolutely. The infrastructure that you're working with shapes the way in which you're able to approach problems.
I love that shift in focus, as you say, from sort of after the event to anticipatory or predictive an approach where real-time decision-making is really what it's about. And it's using the best and most complete available set of data to be able to make the best decision in that real-time moment. And that's a combination of humans and machines at this point. And I wonder for our audience, if you might be willing to just give us a brief overview of kind of what that end-to-end system looks like, not in terms of necessarily underlying technology, but just in terms of the approach. What does it take to execute on the level of precision that you are focused on in real time? If we can just think about it from sort of life cycle of ingesting market data to acting on that data, making decisions in real time, how does that all come together as a system for you? And most importantly, how do you maintain confidence at each step in that process? Chris, do you want to start us off with that?
Certainly. So as you rightly point out, the first step in that process is data ingestion. We ingest a lot of data in real time, perhaps not as much as some KX customers, but from our perspective, it's a considerable amount of data. It's well over a billion ticks a day that we ingest in real time into our KDB platform. And obviously we're ingesting trade data at the same time, and with a view to helping us understand our risk in real time. All of this happens within a millisecond or two of the trade happening. With quote data, we try to ingest it within microsecond. We have a number of analytics that run in real time on top of that captured data that is kept in memory. Those analytics will output, I guess, information on a continuous basis that is informing other parts of our technology stack here at ADSS on what to do in real time. Now, that might be, the market has become extremely volatile and we need to widen our price, to offer some protection. Or it could be that we are now running too much risk and we need to go to the market and transact immediately to reduce that risk. All of these decisions are happening in real time off the back of that data that we are ingesting. I guess those instructions are provided downstream to other systems. We don't necessarily have to go into those on this call, but Nikos and I like to think of, I guess, the quant platform that we've built, which sits on top of KDB, as the brain for our trading infrastructure. It is making real-time decisions on for our pricing. It's making real-time decisions on when we go to market and transact, to manage our risk, and all of that logic, I guess, resides within the platform that we're responsible for.
One of the things that I've discussed with guests on prior podcast episodes is around the importance of understanding the nature of the data and the data itself. And one of the areas that we explored with Judith Gu over at Scotiabank was this idea that there are often things hidden in the data that are impactful on model design and performance that are not immediately apparent. And it can be quite tricky to uncover the signal in the noise, so to speak. I'm just wondering if there have been any examples where you found that you've needed to sort of go back to first principles and think about the underlying data as the feed into the sophisticated algorithms that you now run your business around. Is that something that you've experienced yourselves?
If I can go, so I think the general idea, or the general principle of developing a new strategy is, we try to always base it in some theory that we might have, right? So, you might think that when A happens, B will happen, and therefore you should do C, right? Now, the problem here with all of this data that you get is that actually it's not always that easy to uncover A or even to see B in order for you to do D. So I believe in models that you can explain, at least the theory, right? Why you do something, but how you identify that can be very much hidden in noise because of the structure of the markets as they are today, right? So participants are trying generally to hide their signals, obviously, as we do as well. So it's not always that clear and straightforward to find that information that you're looking for.
It leads me to wonder about edge cases and how you handle or design for edge cases, those outlier events where models break or there are huge spikes in volatility, as you pointed out, Chris. How do you approach that problem today?
So the simple answer is that we place bounds on what the autonomous brain is allowed to do in real time. There are only certain things that it can do in terms of transacting in the market. We don't allow our hedging algorithms to go to market for huge quantities. If it thinks it wants to do that, then it has to alert a human to do it beyond a certain size. Similarly, with pricing decisions, if we get a raft of ticks from a liquidity provider in real time that we deem to be outliers, and that suggests that we have to do something unacceptable to our price, then we have controls on what we will do to the price autonomously, and certain things will be referred to our humans for manual intervention. Most of our client base is retail, and we have a duty of care to them, so we cannot price unfairly to our client base. That is something we take great care to do. So yeah, we have controls in place, is the simple answer, that prevent us from doing unacceptable things in real time.
Do humans now tend to be responding to alerts of this type primarily, or is there a proactive role that the human traders and quants get to play in this process today?
I think the answer is both. So, like it's proactively, if you see something that's happening, or, there's an announcement, anticipated announcement in the market, then you proactively go and maybe change a parameter in the algo so that it behaves slightly different, right? So we also have those controls now that, a human can go and adjust the way that the model reacts basically to that anticipated event, right? Equally, you have the other end of the spectrum where it's a reactive thing. Something happened, you got a tick that is completely doesn't make sense, and then it's a human that will go in and maybe stop the algo even to an extreme case, right, and take over.
It's, the one thing that goes through my mind is the time horizons in which decisions are being made is so interestingly different between now our machines, which are set up for sub-millisecond decision making, as you pointed out, Chris, and humans that require generally more than a few milliseconds to properly assess what's going on. And that kind of itself creates its own tensions, doesn't it? If we're relying on humans to make critical decisions, we have to allow those humans sufficient time to make the best decisions in the moment. How do you try to balance that in terms of risk in the way that you operate today?
Well, that is a really good question, Peter. And I think a balance is the appropriate word there. I think the analogy that we often use when describing that balance to people is that of the relationship between an autopilot and a pilot in an airplane. An autopilot will fly the plane 95% of the time, but the human has to be ready to step in when unexpected things happen or operation goes beyond certain bounds, and they need to have the appropriate instrumentation in front of them to understand what the airplane is doing in real time so that they can make those decisions and understand when they need to take over. So we take a very similar approach to the problems that we're trying to solve here. We try to have our real-time engine making decisions in real time as much as possible, while at the same time providing insights in real time to our trading desk, so that they are able to monitor what's going on. They can take action if needed and be alerted if the operation goes beyond certain parameters, so that they can take over. Essentially. So I think that's the best way to describe it. Nico,
no,
sorry, go on.
I was just going to add to this, actually. I think that's an interesting point what Chris makes. But I think what does that mean, actually? What's the result of this is that you end up having actually a trading desk that is a lot more technical than what it would have been maybe in the 90s, So, you get people that can query, like the dealing desk here can query KDB, right? So they can write KDB code, they can write Python code, they can analyze the data for themselves, and you become more technical in order to fulfill that role that Chris is talking about.
I think you're raising a great point, which is the evolution of the environment that we've been in over these last few decades. KX was founded in 1993, the same year as NVIDIA. And if we think about the trading environments back then, quite primitive compared to today's a sophisticated setup, as you rightly pointed out earlier. And I wanted to explore this idea of innovation and how innovation impacts on our operations, because we are constantly all looking for that next edge that's going to give us the step up, that's going to improve our performance, that's going to give us competitive advantage. And that requires us to be constantly considering new tools and techniques, as well as model evolution itself. And I'm wondering about kind of the process that you go through to evaluate new ways of improving the performance of the team and the outputs that you deliver for your clients. And maybe you could just walk us through kind of your process for including feedback into improving performance, and how you make a determination as to how to change the environment for your traders and for your team as a whole.
Peter, you mentioned there, how do we try to achieve good outcomes for our clients? And I guess that very much is a balancing act. We have to, pricing is our primary lever. That is the product that we offer to our clients. It's the ability to trade on a price. That price has to be structured in a way where it's 100% fair to the client and reflective of where the actual markets are. But it also needs to be priced in a way where, we are capable of generating revenue as the market maker as well. That is a very fine balancing act, and they are, I guess, to a certain extent, opposing outcomes. The easiest way for us to generate revenue is to have an extremely wide bid-ask spread. That is not something that is acceptable to our client base. If we did that, we would have no clients. So, finding that balance is I guess, is kind of the reason that we exist as a team. Now, how we go about doing that, how we go from idea generation through to to capturing the data that's required to test that idea, through to deciding whether it's any good or not, testing the hypothesis, through to putting it into production, and then evaluating whether it's performing as we thought it would. I'm going to hand over to my esteemed colleague here, because if you haven't gathered already, he's the brains and I'm just the wingman.
Yeah, I was just going to say, actually, that's a super difficult question to answer. But maybe let's try to deconstruct it, right? So there are two things here that come into play. So one is, of course, the tooling that you have, right? And the other thing is, of course, the kind of culturally, how do you operate as a team, right? So I think there are two different things that you need to balance out here. I believe, I generally have a strong belief in what we do is that we need to try things out and then try to get feedback as quickly as possible, right? Because, if you design an algo, then you spend 5 months of, back testing it, then 6 months in convincing somebody that needs to go to production, and then you need to wait another 3 months to get some feedback. Well, the market has moved by that time, So, that's one thing, right? So you need to have tools that allow you to go from, idea generation, from that little theory that you have in your mind that A, means that B, then you should do C, to then trying that into production, right? So that's the part of the tooling. Then the other important thing in that equation is, of course, culturally, how do you run your team, right? So the important thing here is that you shouldn't be afraid to make mistakes, because, ultimately, to what I said before, you don't go from A to B in a straight line, never, right? So you will always try something, then you'll figure out, oh, okay, 10% of this didn't work, but 90 worked. So, then you improve on that 10%. So you need that constant feedback as a team, and allow that environment where we can all talk together. We can be open about, oh, you know what, this idea didn't work. So what, let's try something else.
Is everybody involved in new idea generation and providing that feedback loop, or do you focus on a subset of the team in the experimentation stage, so as not to disrupt the kind of the broader trading environment? How do you get that balance right in terms of participation in innovation?
So the team is split roughly 50-50 between engineers and researchers. So I think that's an important point. That's how we structure the team. We have found that works for us. The engineers will provide feedback, I guess, on particularly the non-functional challenges that they're facing when we ask them to implement something. But the idea generation typically comes from the research team. Now, the research team is very collaborative. It's very collaborative between the 5 researchers. Everybody is aware of what everybody else is working on. We have a very simple morning meeting where everybody talks for a couple of minutes about what they worked on yesterday and the challenges they're facing, and what they're planning to work on today. That frequently goes from being a 10-minute meeting to a 30-minute meeting, because others will have ideas on what somebody else is working on. We typically find that everybody is interested in what everybody else is doing, and we found that a very healthy way of generating debate and stimulating idea generation. It also helps that we all sit together. So all the researchers and half of the engineering team, sit on the same desk. We have a couple in the engineering team who are remote currently, but we find that works for us.
And if I may ask, Chris, the technical environment in which you're operating, the infrastructure on which you're depending, how critical is it that is a unified and integrated environment that everyone on the team is able to leverage and use? You said a very interesting thing, Nikos, about the evolution of traders to a point where they're able to actually program in Q, do their own data query and analysis. That sounds like that's a really important step for your team to become as productive as they are today. Can you just talk a little bit about the environment that you've built for them and what makes it successful for you?
I was actually just going to, before we go to the next question, I was just going to add to what Chris said and to which is actually partly what you're asking. So of course you have the researchers that are kind of core mathematicians that they, maybe work on a new model or whatever, but idea generation doesn't only happen from that desk, right? So we have a lot of the time the people that they watch the markets, that they watch the models, and they come and say, oh, okay, you know what? I think the fifth level, the way that we price, euro dollar overnight on the fifth level, we can improve. And then we work collaboratively to, to improve that, because, we don't always see those minute details. Whereas of course the dealing team here, they watch that all the time. They watch how clients react. So yeah, to add to your collaboration question, and then on top of that, to add to your recent question, I think, it has allowed us to be ultimately to offer a product that I think our clients are appreciating ultimately, and they're happy to trade with us, interact with us.
It sounds to me as if you built a model that is very not only collaborative, but it's also, there's a sort of a strong sense of interdependency and shared accountability, but also contribution, which I really love the sound of that. And the environment for your team means that they have access to each other's brains as well as to the systems and data that you've put in place for them. And you've pointed out that that's evolved quite a bit over the last several years. I was wondering, as we now start to think about the future forwards and some of the next generation techniques that are emerging, I wonder what you're getting most excited about. What are the kinds of ideas or capabilities on your radar today that could change the game meaningfully for you? And I appreciate, there's some commercial sensitivity potentially around some of that, but maybe on a generic level, are there specific areas that you're most interested to pursue that you feel have the most potential?
I mean, lots is the short answer. I think that there are plenty of traditional machine learning techniques that we have still to leverage. By that, I mean sort of traditional supervised learning techniques. Nikos and I spent a good chunk of the last few years laying the foundations for what has since grown. And by laying the foundations, I mean making sure that we are capturing good quality data, making sure that we understand when we haven't captured good quality data and have processes to remedy that. That took a long time. So, there is plenty of field left for us to run in terms of leveraging well understood quantitative techniques on top of the foundations that we've already built. We of course have ambitions to step into the unstructured data sphere, start making use of some of the AI techniques that have generated an enormous amount of interest and publicity of late. And maybe we can talk a bit more about those in a second, but I think the focus for us in the next 12 to 24 months is going to be continuing to build on the strong foundations that we spent a few years building. If that makes sense. Nikos, do you want to add to that?
Yeah, I agree with that. I think if I may add, of course, you have the LLMs in the future of the kind of agentic frameworks and all of that stuff and how that's going to impact. That's something that we watch closely, and we we discuss and we have ideas. As of today, what I think is exciting right now is that, of course, like generally speaking, machines have got bigger, models are more accessible, so you can try to process a lot more data, right? So what would have been maybe before compartmentalized, or you couldn't really easily analyze, 500 different features on a single model, now it becomes easier and more accessible. So you're able to uncover new patterns, or maybe you can explain more of those patterns with more data. So that is always exciting and interesting to play with these new models or the old models now. Yeah.
I think you're raising such an important point, Nikos, which is that we are getting access to more data, and that data volume is showing no signs of slowing down. As a result of that, we have to think about how the mix of that new data impacts on the data that we trust, that we've built those foundations around, that we have confidence in, that we're able to trade successfully with. How do we combine those two without creating incremental risk? But how do we take advantage of the information that's contained within that data to enhance the work that we're doing? We're working with a number of clients today that are converging their unstructured and structured data environments around KDB and they have confidence to do it because they have built that trust in the underpinnings with KDB on structured data. And so adding that unstructured environment into that is allowing them to ensure that they reduce hallucinations, that they improve accuracy, that they get confidence in that data, which is where, generative AI shows great promise, but has also come with it a kind of a price tag, an unknown price tag in the trading context. And so how do we manage through that? I think that's super exciting. But the other part of this that you've mentioned is accessibility and usability of that information and that data. And, we are looking ahead to a world where perhaps you don't have to program in a language to be able to get questions answered, particularly for those people that are on the business end and who have less of a technical background or context. And it's going to be fascinating to see how to get that balance right. How much do we need to continue to develop programming skills? Is it really about this idea of idea? It's idea management, idea development, if you will, is kind of at the essence of what I think we're all striving for. We're trying to unlock human potential and apply it in this way with the best tools and techniques available at our disposal, and using AI to carry the workload for the prediction side that is so difficult for humans to handle at scale. So I think the democratization of data, if you will, the accessibility married to the access to new types of data suggests that we've got a really exciting environment lying ahead of us, but also quite a challenging one. I wonder if there are some areas that you are most concerned about at the moment that you think we as an industry really need to focus on to ensure that we don't get ourselves into trouble. Anything come to your mind, Chris?
I mean, that's another good question, Peter. I think maybe as we get into that, let's pick up on the theme of democratization. And I think you asked a question about that a few minutes ago, which we probably didn't answer, actually. And so let's maybe just explore what that has meant for us here up to this point. I guess the trading function today looks completely different to how it did 15, 20 years ago. We touched on that before. The guys who sit on our trading desk today are interested in data. If they don't understand how to get it themselves, typically we see two things. One, they'll ask a member of the quant team to get it for them. And two, they will follow that up by saying, well, if I want more of this, how can I get it myself? And I guess on the back of that, we've seen a couple of evolutions. We've seen guys and girls in roles who perhaps wouldn't have previously learned programming, expressing an interest in learning how to use Python and how to write Q, and that becoming an integral part of, I guess, their daily jobs. That has, I would say, significantly improved the idea generation within the trading function as a whole. I mean, we've spoken a lot today about the quant function, which is a subsection of our trading department here at ADSS. But the human traders, the pilots in that autopilot pilot analogy that I gave before, they are becoming more technical and more, I guess, inquisitive about how they can leverage the data that we have gathered over the last few years, and we found that to be something that's tremendously powerful. We haven't yet in this podcast spoken about PyKX, which is obviously something that you recently released, which I guess has taken that democratization to the next level for us. That has made it even easier to get data from KDB. Q, as I'm sure you are aware, is a tough language to get on top of, particularly if you aren't from that background and you're not that technical. And I guess Python is much more of a commodity skill set. So the fact that there is now this tool that you can use to get or to more closely couple your Python environment with data that exists in KDB, again, has been tremendously powerful for us. And we can talk about some specific use cases there if you like. But I just wanted to make that point because I don't think we fully answered your democratization question beforehand. So I think that has been tremendously successful for us up until this point. From a departmental standpoint, your question just now was asking, how do we see the future of that? I think, and maybe how do we plan to leverage some of the LLM tooling out there to take that even further? And I think, the answer to that is probably not completely clear to us yet. It's something that we all use day to day at the moment, just as an efficiency and productivity tool. We have not yet attempted to really couple those tools with the data that we have in KDB yet, in terms of making that available to an even broader user base. That's not a problem that we have tackled yet. I guess it's a space that we're watching closely. It is something that we plan to look at, but I guess perhaps the way forward is not entirely clear to us just yet. Nikos, I don't know if you want to add to that.
No, I think, to what Chris said, of course, the whole agentic, I mentioned before, the whole architecture of agentic AI models, like small agents that will do some task for you. That's something that of course is very interesting for us. And, we can theoretically see an environment where we have some of those agents that are doing maybe client classification, for example, right? And they provide a suggestion, and then eventually you automate that even further, or they automate another task that you do. I think we have some time until we will use a fully autonomous agent to trade for us. It's not, it's not outside of what we think is possible, but I don't think it's going to be next year. Let me put it that way.
Well, we recognize that innovation is a journey, and I think Chris, you pointed out there's some sort of open items, some questions that are emerging which were not fully resolved around. We don't have time on this podcast to go into it, but there's some extremely exciting things that we're working on here at KX around all of the areas that we're talking about, everything from GPU acceleration to QLLM to agentic workflows. We have clients that are now actively implementing. So we are at an early stage, but we're starting to see real fruit being born. And I think the potential is very significant. We should not underestimate the leverage that can be gained, particularly through agentic AI. I think that's going to be very, very exciting for us. But it doesn't take away from this balancing act that we've been talking about earlier, which is the role of the human and the role of the machine. And how do we maintain control and manage that environment to handle the unforeseen, or where parameters go out of spec, etc. And I love the analogy of the autopilot and the pilot. I think that's such a great way of thinking about how machines can help us, but also where there's risk. And we have to manage that risk with the humans in the loop. So developing those models, developing those techniques, and thank you for highlighting PyKX. Yes, that has been a game changer for many of our clients to be able to open the door to their Python communities and to give them access directly into the KDB environment, and being able to unlock the power of KDB to many more people. We've got so much more to come on that front, but we will save that for another day. I think our time together is coming to a close. So I wanted to thank you both so much for taking the time today to share your thoughts. It's been absolutely fascinating chatting with you, and you've achieved great things at ADSS. We appreciate you being on the journey with us. As we wrap, I wonder if there's one final closing thought that you would like to share from each of your perspectives, something that our audience can take away and see, maybe think about how they might be able to apply and use that in their own environments. Maybe, Nikos, I could start with you.
I can give general advice if you want. So be curious, always be curious, try new things out, and practice makes perfect, like the more you try things out, don't be afraid of failure. Eventually you'll get something that works.
Thank you, Nikos. Chris, what about from your side?
Well, it's tough to follow. I'm not sure my comments would be as inspirational as that, but I would just say, look after your data. It's perhaps a bit of a cliche, but my goodness, if you lay good foundations and you are confident in your data, it makes what comes next so much easier, and you can be so much more confident in the results that you're generating. So I can't stress that enough, I think.
Take care of your data. Don't be afraid to fail. Keep learning. Great advice. Chris and Nikos, thank you again so much for joining us. What we've heard about today is that precision to market making isn't just about speed. It's about constant refinement. It's the ability to learn fast, adapt smart, and stay grounded in the data that actually matters. Thank you, Chris, Nikos, for showing us that you can start from a team of two and build something amazing over time that's constantly evolving. And there's so much more to look forward to. So for our listeners and viewers, thank you for your time. If you want an overview of the key lessons learned from this episode, take a look at the links in the show notes below. For more information on KX, please come to kx.com. We'd love to hear from you. And if you've got any ideas for future podcasts or topics you'd like us to cover in future episodes, please email us at podcast@kx.com. We look forward to having you back for the next episode. Catch you next time. Thank you.